Chris Hallows here with Benchmark Mortgage, and bringing you our House Happy seminar series that we've done several of these in person, but wanting to get this recording done so that you, in the comfort of your own home or on your cell phone or whatever you're doing there, can digest the content that we had shared in these. This is as of spring 2026. Things change, and so just know that. And really, if you're viewing this, that it is hopefully then in conjunction with, I'm going to put this up on the screen here, that our definition of house happy, and that we really want to project this out to the community of Flagstaff, that we do believe that everyone deserves to, just like it says here, is the definition of house happy is having a safe place you can call home that meets your space needs, fits financially, and positions you and your family for your best future. And so that's where we wanted to connect with everyone to provide local resources and navigational assistance to help you get onto that next step of house happy. And whether that is, finding an affordable rental, or actually considering home buying, or optimizing your space. If you are a homeowner, are you trying to pay down debt? Are you trying to renovate? Are you trying to move up, right? Everyone has kind of a next step, right, as to their house happy goals. And so right now is we're going to talk today is about the home buyer 101. That is one of the most stable ways that you can create house happy, is owning your own space. So again, my name is Chris Hallows. I'm a senior loan officer with Benchmark Mortgage, and I've been so here in Flagstaff for the last 18 years. So it's a community we're super excited about and excited to serve. So I wanted to start off looking first on that value of home ownership. And well, this graph seems pretty stark in contrast and differences here. And you can see that as of surveyed Federal Reserve Board survey of consumer finances, that the net worth of a homeowner versus a renter is 40 times greater, right? A lot of people see a home ownership as what you call like a forced savings account, right? You're paying for a roof over your head regardless, because indoor living has become extremely popular. And that's where simply that equity, and ownership is increasing. Then that's not just the roof over your head and all the soft goods of owning your own space and being able to paint your own wall without talking to a landlord, but being able to actually grow equity and have something that you're paying towards. If we look at that, then and kind of showing that calculus and math, and it's very kind of depressing. If you take your current rent, times it by 60, that's what you've paid your landlord in the next 5 years, and you have nothing to show for it, right? They don't give you anything for that. Whereas based on just some rough math here, if you see on a $500,000 home purchase with as little as a 3.5% down, so just saying, even with the lower down scenario, in the next 5 years, you will have paid $35,000 worth of principal. That's more of the home that you will then own. And then with an average of 3% year-over-year appreciation, Flagstaff has actually in the last 40 years been closer to about 4% year-over-year appreciation. But just more conservatively, that's almost $80,000 worth of appreciation that now is yours as well, right? And the entire $500,000 home or $500,000 home is appreciating at that value of 3%. So that is then a homeowner net worth increase in just the next 5 years of $115,000. In that 5 years, like we know, like time will sometimes days scoot by, but time goes fast when it comes to that. So let's then talk. We're going to move through these fairly quickly. I mean, bottom line, reach out to me. Would be happy to guide you through these more specifically. But the 6 steps here are connecting with your lender, get pre-qualified or pre-approved, connect with a realtor, find the home, get under contract, complete inspections, go through final loan approval process, and close and own that home. Those are, as simply said, what I'd kind of categorize as 6 steps towards the home buying process. I know a lot of folks will start, you're clicking online. So that should be like the one step is you're clicking online, looking around, and would love to own that home. But a lot of folks do start connecting like, all right, I'm all of a sudden falling in love with the home. But I'd highly, highly recommend that you understand the implications to the financing and your personal financial goals before you're all of a sudden start going backwards and just trying to justify a home to fit because you fell in love with the home. So pre-qualification, start with the lender is definitely what I would recommend. As far as, and that can happen, I should say, these next steps, when we talk about pre-qualification and pre-approval, this can happen a year, 2 years. months ahead of you actually considering to buy. And that's highly, highly, highly what I'd recommend. Sarcastically is like, it blows my mind. This truly happens that, today we could have a phone call at 4:00 p.m. and someone that all of a sudden found the home they love and want to make an offer on it and haven't gotten pre-qualified, haven't really talked through their financial budget or goals, and they just want to buy the home. And, we help folks in those situations as well. But can you imagine that that's just not maybe the ideal scenario? And then really looking at your budget and your goals and lining up the home to meet your goals. And so that's where the initial steps of pre-qualification, pre-approval, even if you're thinking, let's buy next year, get the conversation going now. And that's where with the initial application here, that's just a soft check. And that is something that we do. You have to survey other lenders if you're looking around there, that they might not allow a soft check or do a soft check, but that makes it so that's essentially a pre-qualification valid for 4 months, and that isn't a hard hit on your credit. So highly recommend the soft checks there in that situation. And then a consultation to review your goals, abilities, loan options, and optimal purchase strategies. And then also, the pre-approval, or the difference between maybe pre-qualification, pre-approval, is that you're actually submitting documentation that support the information that you've given to the lender. And so that essentially strengthens your application and really strengthens any offers to a seller, because in the Arizona pre-qualification form, that is something that the lender is checking and saying, yep, I've seen their pay stubs. Yep, I reviewed the bank statements. They got the money. They make the income. They are pre-approved then essentially for this loan. And so, get those steps done as early as you can in the process. It'll only serve you better to get an idea of what your options and abilities are. And when you do that, the lender is going to be looking at these 4 financing factors: credit, income and debt, down payment, and the property. Of course, at pre-qualification stages, we can get an idea of the property that you're interested in and give you some navigational assistance as to any concerns with that property type. But that's definitely something we get a little bit more into once you're actually under contract on a property. But let's break each one of these down here a little bit. So credit, we're going to get a tri-merged credit report. That is then, we're able to use the mid-score. Keep in mind, these are different than like your MyFICO score here. And that's something that we usually see the MyFICO or your like Credit Karma is sometimes a little bit higher. Could be anywhere from 10 to 30 points optimistic typically. But that doesn't mean because the lender did a soft check that your score went down, right? It's simply different modeling there. So keep that in mind. 620 plus is kind of more ideal for most programs, or at least kind of minimal, even though some programs can start as low as 580. 760 plus gets like best possible terms. So there's a big range of, hey, can be pre-qualified or optimal as far as terms go. And keep in mind, credit can change. So I'd really not wait as far as thinking, I'm going to wait for a perfect time to do this soft credit check and pre-qualification, and then take those next steps. It's something that we can help you more surgically walk through that. You might find out that it's better to save down payment than to pay off certain debt, or you might find that paying off a little bit of debt here and there could put you in the exact spot that you need to optimize your credit to move forward on the purchase. So a couple of trick tips there that we can help you look at more earnestly, because we can say, all right, this is where you stand today, and you're looking to buy a home in the next 3 to 6 months. Here's what you can do to help that credit very surgically improve where you want it to be. A couple little asterisk notes here in the screen is annualcreditreport.com is where you can get a free copy of your report to just see what's on it. It won't give you a score, but you can just see what's going on your credit and see what's being reported there. Make sure you don't have any lates or any erroneous things that going on there. And then optoutprescreen.com is highly recommended because there is such thing right now called trigger leads, to where as you do start actually pulling credit to start working towards a mortgage, the credit bureaus can actually sell your information so that you're going to get all these spam calls coming in of everyone, all these telemarketers trying to sell you a mortgage or other services. And that's where Opt-Out Prescreen will help you actually avoid that. So definitely highly recommend that. Jumping into income and debt here. Typically, a 2-year employment history is then typical base requirement there. Full-time base wage salary at current value can be used out the gate. We get a lot of questions of if I change, positions or job types, or if you're full-time, you have a 2-year work history, whatever you're currently being paid on your new full-time job, we can utilize. Now, variable pay, things like if you have any stipends, salaries, or stipends or commissions or shift differential, those are things that then will need an average over typically 12 to 24 months, depending on the program. Similarly, the second job income also would need to be on average there, or typically needed to have that also to your concurrent history. Self-employment is usually verified by 1 to 2 year tax returns. So that's also a different factor when it comes to income. Down payment, there's so many different down payment options here. And so just to give you a similar rundown here, there are programs that allow 0 down. That's the VA and USDA. FHA allows as low as 3.5% down, and conventional loans for first-time buyers can be as low as 3% down. Otherwise, it's 5% plus. Down payment goes towards the purchase of the home, closing costs, and prepaids. And inspections are over and beyond that down payment percentage. So when we talk about then, closing costs and prepaids, that's paying things like your prepaids are paying things like your homeowner's insurance, some prepaid taxes, some prepaid daily interest. Closing costs are things like the title company, an appraiser, the lender fees, et cetera. And so generally speaking, and these fluctuate widely depending on services that you select, depending on the property purchase price, et cetera. Those could be total closing costs and prepaids probably somewhere in like a generally like $5,000 to $10,000 range, right? Ballpark. Those can, again, vary widely there. And inspections are things like home inspections, termite reports, radon gas testing, sewer scopes, things that are not required for the loan, but you want to have some money set aside for those. Probably generally anywhere from $500 to $800 on the low end, and maybe $1,000 to $1,200 if you're getting more intense on some of those inspections. There are down payment assistance programs, and currently here again in the spring of 2026, an awesome program. And just to give you an example is the CHAP funds. This is in city limits, $50,000 of down payment assistance. Definitely check box requirements here, income limits on this program. There are certain terms along with that assistance, primary residence only, need to retain it as a primary, etc. But those are different things that can help towards down payment and closing costs as well. And so even though there's the minimum requirements from specific loan programs, there are lots of different ways that you can, get assistance, as well as even potential negotiation terms to have seller help with things like closing costs. Seller can't cover down payment, but they can help closing costs. Lastly, the appraisal, the property, typically appraisal required. Health and safety hazards may need to be addressed. Different loan types might then handle certain things different, like condos versus manufactured homes, like rates and different terms can change there. But as far as rounding out here, I'm jumping through here to the sides is, biggest mistakes that we see home buyers make, like we talked about, waiting until you think you're perfectly ready. Don't do that. Talk to lenders early, looking at homes before budget. We already talked about that. And then making big purchases, right? If it's time to upgrade the car, you definitely want to, but you have home purchase goals, talk to a lender first to see how does that impact you, because that monthly payment on your car could make a big difference in what your abilities are on that home purchase. And then listening to bad internet advice, the unfortunate factors of, that there's a lot of talking heads out there, a lot of people that might not have the right motivations on saying all sorts of funky things that maybe worked for them in their situation or worked in a different state or et cetera. So talk to locals who know the market well. And bottom line, and let's jump on to next slide here. Give us a call. We're happy to do a free 15-minute consultation just to check in and answer any questions you have, or if you'd like to take next steps on pre-qualification, we can help you with that as well. And that is a no-cost process for us. So I hope this is helpful for you. Again, it can seem intimidating, can seem big and scary. We're here for you, and I look forward to connecting.